Hello, everyone. My name is Ari from Nefesh B'Nefesh, and I'll be hosting the webinar today on Aliyah dollars and cents. I'm joined by two experts in the field, Ellie Cole, CPA at Expat Tax Services, and Naron Janagli, Wealth Manager at Pioneer Wealth Management. Today's webinar will be presented as a frontal presentation. If you would like to ask any questions, please use the question and answer button in the bottom of your Zoom screen. Contact information for Nefesh B'Nefesh, Ellie, and Aaron will be shown at the end of the presentation. At this point, I am honored to welcome Ellie, who will begin today's presentation.
Thank you, Ari. Thank you, Nefesh B'Nefesh. As Ari mentioned, both myself and Aaron, who are the presenters, are not formally part of Nefesh B'Nefesh, so people should be sure to take our information that's at the end of the slide. Be in touch if you have specific questions, if you'd like to be on our listserv, if you'd like us to be in touch with you. As we'll cover a variety of topics here, I imagine there will be a fair amount of specific questions, so feel free to be in touch. We won't answer everything in this presentation, but we can certainly be in touch on a one-on-one basis to answer the other questions you might have. As Ari said, this presentation is called Aliyah dollars and cents. It is specifically given by myself and by Aaron, as Ari said, we're the experts in the field. And this is really meant to be a nitty-gritty presentation where we're not going to focus on all the wonderful reasons you should make Aliyah, all the great parts of Israel. There's other Nefesh programs about that, and everyone has their reasons to look into. The focus of this talk is really financially, how will it look to make Aliyah? Can you manage it? Can you make it? What will the numbers look like? So we try to really break down a bunch of numbers. We'll go through the slides. It's being recorded so people can access things later as well as they would like. So kind of the general idea is to figure out, as far as whether you can make it financially making Aliyah, is can you have more money coming in than you have going out? As an accountant, I always say, I call it income versus expenses. But the bottom line is, can you survive financially? So the idea, and this is what we're going to walk you through with some of the details, is first, we need to consider how much money you'll be spending with some budgets and other things, which we'll talk less about in this presentation. And then the other thing is, after you know what you're spending, well, how much are you earning? And how much money are you really coming home with at the end of the day? And are your earnings higher than your spendings, in which case you're comfortable, or if not, do you have some savings to get by? So the idea of expenses are to make a budget. Many people might have a budget already in America, some don't. But a budget in Israel is going to be a very different thing, as there's different expenses you're not going to be familiar with. It's a great idea to sit down and make a budget. Nefesh B'Nefesh has this slide here, which is a wonderful slide to spend more time on your own going through. It is just a very general idea, as numbers will change drastically based on individuals and also where you're coming from. For example, the biggest expense usually on one's budget is going to be rent. So is rent higher or lower when you make Aliyah? Depends. If you're making Aliyah from New York City and moving to Beersheba, odds are your rent expense will go down. But if you're making Aliyah from Cleveland, Ohio and moving to Tel Aviv, probably your rent expense is going up. So you need to look at various current expenses you have and then consider what things will look like when you move to Israel based on what your plans are for when you move to Israel. The expenses that should be highlighted that are usually the most different between Israel and America. There are some that are savings, specifically healthcare. I assume you all know in America what your healthcare savings are, what the cost of insurance and the cost of medical care. In Israel, it is substantially less. Also, Israel's telecommunications, internet is cell phones are a bit lower costs than in America. And public transportation, depending on where you're moving to, but especially the bigger cities in Israel, and to get around from one city to another, public transportation in Israel is very affordable and very common, at least up until 2.5 months ago, and hopefully in the future, people will be using public transportation again. So those are areas where you can really save a lot of money and where your expenses might be less living in Israel versus living in America. Some areas where it could be higher living in Israel than America Could be housing. You should check. There's a couple websites, Madlan and Homeless, that Nefesh B'Nefesh recommends. And there's other resources as well where you can look to get an idea of what your housing expense might look like. Transportation, if you're looking to buy a car, it's a much larger expense buying a car as well as maintaining a car, paying for gas and everything. Is a much higher expense in Israel than the United States. And lastly, shipping costs. If you're planning on shipping all of your furniture, all of your things from America to Israel, that has a large cost to it. If you're not planning on shipping all of your things and buying all new things, that also has a large cost. So it's a really good idea to do it as many details as you can. Go through your expenses, go through your current budget and your future budget to get an idea of how much money you will be spending after you make Aliyah versus before you make Aliyah. And then the flip side of the coin is your income. So you have your expenses. Well, what's your income? Your income, you have to look at all of your sources of income, your salary, your passive income, any other income that you have. And then you have to look at the income post-taxes. That's going to be the main part I'm going to talk about in a few minutes, but it's going to be how much income you have after all of the taxes. Also, what sort of Aliyah benefits you have. There's Sal Klita, which is an automatic grant that everybody gets. And there's also sometimes Aliyah grants that Nefesh B'Nefesh can answer in other seminars and other discussions about different income, different benefits that you'll have to help you out financially. And then also there's lifestyle changes. You have to consider what is your income going to look like in Israel versus when you were in America. Maybe you'll have more free time and you'll be doing English tutoring on the side. Maybe you'll have other changes in your lifestyle. You have to consider all of that to consider your total income. And that's kind of the idea of the budgeting, the income versus the expenses. The idea of the income brings us to the next component of the presentation, which is what I'm going to really focus on, which is not just the income that you earn, but how much of that income that you earn you're going to take home with you, which is really the key point that people usually want to know is, okay, I know how much I earn, I know how much my salary is, I know how much my investments bring in, what my pension is, but how much of that is really coming into my pocket at the end of the day after my US taxes, after my Israel taxes, after I move to Israel. So that's what I'd like to kind of address in my remaining time in this presentation. So I guess as a formal introduction for myself, my name is Eli Cole. I made Aliyah just over 10 years ago, originally from Columbus, Ohio. I went to University of Maryland, and then I moved to New York, where I worked at Ernst & Young for about 5 years. I'm a US CPA. After working at Ernst & Young, I made Aliyah. I started my practice on my own, doing individual returns for people on the side while I went to Ben Gurion, got my MBA at Ben Gurion University. Then I spent 1 year at GE while my practice grew, and then I joined with Expat Tax Services, where I'm now a partner. At Expat Tax Services, our client base is mostly people like you, people that have made Aliyah, or Americans that were born in Israel, living in Israel, but we mainly service Americans living in Israel, as I'll get into reasons why they need a special accountant that is more familiar with the Israeli and US tax situations. And so while I am a US CPA, because I've been working here for over 10 years, I'm very familiar with the Israeli tax rules as well, and I can give general guidance to Israeli tax considerations. And when necessary, we'll bring in an Israeli CPA if you need to file anything or need anything formal on the Israeli tax side. So the three topics we're going to go through is first, why it even matters, why you still need to file US taxes even after making Aliyah. People often think, move to Israel, forget about US taxes. Unfortunately, that's not the case. Then after you're there, Israel, what sort of Israeli tax considerations do you have to have? And then who you are matters. And I'll touch upon this as much as I can. This talk is designed to retirees, so I'll focus on the main retiree considerations. But again, everyone has specific situations, so we'll talk about the general concepts. And then, as mentioned at the end, will be my contact information. You can be in touch for specific questions. So number one, and it's a little bit of a faded picture, it's supposed to be of Abraham Lincoln. And the reason it's a picture of Abraham Lincoln is it's his fault as to why we still need to file US taxes even after we make Aliyah. It was Civil War time when Abraham Lincoln came up with the idea of what's called citizenship-based taxation, or worldwide taxation. The idea is most countries in the world have what's called a residence-based taxation system, meaning if you're a resident of a country, you live in a country, you pay tax to that country. If you're not living in the country, you don't pay tax in the country. That's how almost every country in the world works. The United States is different. The United States says no, we don't tax people based just on residency. Rather, we tax them based on citizenship. If you're a US citizen, you need to file US taxes. Doesn't matter. I have clients who are born in Israel, don't speak a word of English, but because they happen to have US citizenship, they are required to file US taxes and report their worldwide income, even if you have no income in the United States, which is probably not the case for most retirees. However, even if you have no income in the US, you still need to file a US tax return and tell the US about your worldwide income, about the income you're receiving in Israel. Not only do you need to tell them about your income, you also need to tell them about your foreign financial accounts. The United States wants to know about how much money you have outside of the United States. They need to know about your Israeli bank account, your Israeli pension, and the other non-US financial accounts you have. In some cases, if people have very small amounts, they might be below the threshold to need to file. But generally speaking, when someone moves to Israel, they are required to file what's called an FBAR, Foreign Bank Account Report, and to disclose their Israeli financial accounts to the US government. Doesn't mean you have to pay tax on it. It's just a law to share with them what you have. And then obviously we have Israel. Now, I mentioned the US has a citizenship-based taxation system. Israel has a residence-based taxation system. Israel says, if you are an Israeli tax resident, then we want our share of taxes from you. So what is an Israeli tax resident? An Israeli tax resident is one whose center of life is Israel. Now, for most people, it's pretty black and white when your center of life is Israel. You make Aliyah, you move your family, you spend the majority of your time. You sell your place in America, buy a place in Israel. It's very clear for most people when your center of life is Israel. And then you're an Israeli tax resident. For other people, it's not so clear cut. Sometimes people have one spouse makes Aliyah, one doesn't make Aliyah. They're spending plus or minus 183 days, but close to the border, majority of the year less. They keep a residence in America. In those cases, people often ask, is my center of life Israel? Am I an Israeli tax resident? The answer is talk to a lawyer or talk to me. We'll give you a little bit of background. Maybe we'll bring in a lawyer. If it's not clear cut, we'll have to make that decision. We'll have to understand. But generally speaking, I'm going under the assumption that you are an Israeli tax resident. If you're making Aliyah, you're making Israel your center of life, in which case you have to also report and pay tax to Israel. So we have the US citizen with the US citizenship-based taxation system, and we have you as an Israeli resident with Israeli residence-based taxation system. So you have these two tax systems that you're in. Doesn't mean you have to pay tax twice. It doesn't mean you have to pay tax to everyone. It does mean you have to report to everyone. So I always say to people, first step is compliance. You're going to have to share everything with each of the countries. You're not able to anymore keep a US trust that Israel's never going to know about, or keep an Israel brokerage account that the US is never going to know about. You have to share all the information, and you have to fill out a lot of different tax forms. Secondly, and this is really, I think, the main point that people want to know about, is paying taxes. Compliance is, nobody likes to fill out a lot of forms, to file a lot of information, but at the end of the day, what we're really concerned about is paying taxes. How much tax am I going to have to pay? Am I going to have to pay double tax? Am I going to have to pay Israel higher tax? That's the main idea. And the two countries both have a few different tools to kind of, in general, try to minimize this concept of double taxation, to try to protect the individual and not have too much of high taxes. And generally speaking, for retirees, there's not usually a big bump in tax due. It depends on a lot of different factors, but there's not usually a big increase in tax due for retirees, especially short term. And I'll explain the reasons why. The US has three main tools that we use that are going to be different than your current US tax returns. The first is called the Foreign Earned Income Exclusion, or Form 2555. The foreign earned income exclusion is probably not so relevant to most people because it refers to earned income. I assume if you're a retiree, you probably don't have earned income. But the concept is, if you're living and working in Israel, you can exclude the first 100,000 plus or minus of earned income from being taxable to the US. That's assuming you're working and living in Israel. The money you're earning from your Israeli salary can be excluded from US taxation. The second thing is the foreign tax credit, which is the idea of no double taxation. Foreign tax credit says, I earn money. Let's say I have a rental property in Israel. And let's say my rental property in Israel earns $20,000 for the year in Israel, and I pay Israel $2,000 tax. I can take a foreign tax credit to offset, because I've already paid $2,000 on this rental property. I can reduce my US tax on this rental property by the $2,000 I've already paid to Israel. The idea of no double taxation. You can take a credit for the tax you've already paid to Israel to reduce your US tax, subject to various restrictions. We definitely need to look into that, but that's into the details. But that's the concept: is you pay tax to Israel, you get a credit to not have to pay double tax to the United States as well. The third tool that we have in the US is what's called a treaty-based position, or Form 8833. The most important example of this for retirees especially is Social Security benefits. According to the US-Israel tax treaty, one who is receiving US Social Security benefits is able to take a treaty-based position to exempt their Social Security benefits from US taxation. I'm going to repeat that one time because it's really important and sometimes confusing. If you receive US Social Security benefits and you're living in Israel, you no longer have to pay tax to the United States or to Israel on those Social Security benefits. The United States says, you're living out of our country, we're not going to tax you on Social Security benefits, we're leaving that right to Israel. Israel says, we choose not to tax you. So your Social Security benefits are actually now essentially tax-free. So that's actually an example where potentially your tax will decrease when you make Aliyah, which isn't usually what happens, but in this case, that is going to happen. Also not mentioned here, because I don't know where everyone's located, probably all over the US, but as far as state income taxes go, when you're no longer a resident of your state, you no longer will be paying state tax on things like pensions and other non-state derived income. So especially if you're coming from California or New York or a high state tax, a state income tax, again, there's a chance some of your taxes might actually decrease as you move, as you make Aliyah, because you're getting out of the state income tax and you're no longer paying that tax and you're saving the Social Security benefits, but now you are subject to the Israeli tax considerations. And what are those? We'll move on to the three Israeli tax considerations that we have. Number one is nikuyim. Nikuyim are almost like deductions. They're tax credit, tax points. This depends on your specific situation. Depending on when you make Aliyah, you get short-term nikuyim. Depending on how many children you have, depending on where in the country you live, way up north, way down south, you might have more nikuyim, which will lower the amount which will give you more tax deductions to lower your tax due. The second thing is zikuyim. Zikuyim are credits. It's kind of the same idea as the U.S. foreign tax credit. Israel gives you zikuyim. It's the same bottom line that I mentioned with the U.S., which is, I think, one of the key points that we have with the dual taxation of U.S. and Israel, which is, in general, you're not being taxed twice. You're being taxed up to the highest rate between the two countries. So if you receive dividends from the U.S. and you're paying the U.S. 15% tax and Israel is 25% tax, you don't pay 15% to the U.S. and then 25% to Israel. That would be 40%, which would be very high. Rather, you pay 15% to the U.S., Israel tax is 25%. You get a zikui on the 15% you already paid to the U.S., and you only pay the difference to Israel. The third issue with Israel, which is probably the other really key thing to keep in mind, is the 10-year exemption. When you make Aliyah, you have a 10-year, or if you're an Oleh Hadash or Toshav Chozer, a returning resident, Israel gives you a 10-year exemption. Israel says for the first 10 years after you make Aliyah, you do not have to pay Israel any tax. You don't have to report anything or pay Israel any tax on any non-Israeli income. So for retirees, this is really, I think, one of the key things to keep in mind for the first 10 years when you make Aliyah is you have an exemption from all of your non-Israeli income, which in most retirees' case is going to be the majority of their income. Now, the 10-year exemption is really great, helps people, retirees especially, when they first move to Israel. It's just important to keep in mind, I think, a few misconceptions that people often have with this 10-year exemption. Number one is a 10-year exemption is for 10 years. It's not forever. So it doesn't mean, oh, great, I'm making Aliyah. I don't have to think about any of my U.S. passive income because I'm exempt forever. No, you're exempt for 10 years. That's a long time. Hopefully, it's not forever. You still have a lot of many years post the 10 years that you'll have to consider what your Israeli tax consequences will be at the end of the 10 years. Secondly, people think that this Israeli exemption means no tax anywhere. That's not true. You still have U.S. tax. You're still a U.S. citizen, and this income that's exempt, it's exempt because it's exempt from Israel, but it's still U.S. income in the United States is still going to be taxing you on the income. You can't call it Israeli income to get out of U.S. tax because then it would be taxed by Israel. So it's not tax-free, it's just exempt from Israel. The third thing is people think exemption includes all income. That's also not true. For retirees, it might be true because it's possible that all of your income will be derived from U.S. investments, U.S. pensions, etc. But if you have income derived from Israel, this income will need to be reported to Israel and pay tax to Israel. The key, I think, income that people often don't realize is when you have, if you have any earned income, which I know retirees don't usually have, but still, let's say you continue working occasionally for a former employer, you're still getting a W-2 from the U.S., or maybe getting passed through commission, you're still getting paid from the U.S. If you're physically working in Israel, even though the money is earned from a U.S. employer and paid to your U.S. bank account, that income is not exempt for 10 years because you're physically in Israel. So Israel will tax you on that income because it's being earned in Israel, not outside of Israel. I just want to kind of mention a few different items. I'm not going to get into them, but just to kind of keep in mind a handful of different areas that are red flags, as I say, because various different reasons, because we talk about this idea of no double taxation. One country gives you credit for tax paid to another. That's when everything works out well. The problem is sometimes one country gives you a special tax benefit, the other one doesn't, and you do get hit with what could be, what could feel like double taxation. One example is atzma'i income, which is atzma'i is self-employment. If you're working in Israel as an atzma'i, or you're still working for a U.S. As a contractor for a U.S. company, but you're self-employed, not only are you going to be paying Israel all of their taxes on your self-employment income, but the U.S. is still going to want Social Security tax because Israel's Bituach Leumi and U.S.'s Social Security do not have an agreement. So that is actually a form of double taxation. I don't think it's relevant for most people that are retirees, but if you plan on doing occasional freelance work when you're retired in Israel, it's very important to understand the amount of tax you're paying because it's going to be substantial because of the issues that we have with the Social Security tax on top of all of the Israeli tax. We also have rental income, whether it's U.S. rental or Israeli rental. They each have special rules. If you sell a property in the U.S. or Israel, if you have an Israeli pension, Israel gives some tax benefits, the U.S. doesn't. Similarly, an education stipend, Israel gives many tax-free stipends. The U.S. might not recognize the tax benefit there. And then we also have something called the PFIC, a passive foreign investment company, which is a very common investment vehicle which often leads to tax nightmares. I'm going to wait for Aaron, who's going to take over in a few minutes, the presentation with the wealth management perspective. Will warn you about PFIX and what you have to be concerned there, which again creates a double taxation problem. So just want to do a really quick run through a quick example to kind of give you a picture of what I explained as far as how the double taxation goes, as people often, I think, get a little confused with the two countries recognizing the tax due to the others. So I give an example of an individual, Sam, a US citizen, retires, made Aliyah 10 years ago. And in this example, I say he only has three types of income: $100,000 from a US pension, $20,000 from US dividends, and $30,000 from US Social Security income. So in this example, he has a total of $150,000 of income. Year 10, so he's still within his 10-year exemption for Israel taxes. So year 10, he's paying about $15,000 on his pension. That's just the US tax due. Pays about $3,000 on his dividend. As we said, no Social Security, no income on the Social Security. That $30,000 is essentially tax-free because of the treaty-based position that we get as the benefit. And so it's $150,000 of income, about $18,000 of tax to the US. Not too bad at all. And that's all paid to the US after they make Aliyah. As far as Israel goes, no tax due anywhere, no Israeli sourced income. So all of his income is exempt from Israel. So bottom line is going to be, like I said, the $18,500 tax to the US with nothing due to Israel. Then what happens in year 11? Year 11, he's no longer exempt from Israeli tax. So as a result, Israel's going to tax all of his income. It gets a little confusing as far as which income Israel gets to tax first versus which income the US taxes first. And I deal with this kind of one-on-one with the people later, but just so you know, for this example, Israel has first rights to tax the US pension, the US has first rights to tax the dividend. So because Israel has first rights to tax the pension, the US isn't going to tax you anything on the pension because that's Israel's right to tax the pension. Israel's going to take all their tax out of you there. The dividend, US still taxes, they're $3,000, and Social Security is still exempt. So for the US, it's $3,000. Israel, like I said, Israel gets to tax your pension. What's nice about how Israel taxes your pension is Israel fixes the tax on your pension as the same as you would have had to pay to the United States. So your tax on your pension doesn't increase. It's the same $15,000. Just instead of paying it to the United States, you're now paying it to Israel. Now, as far as dividend income goes, Israel taxes on dividend is 25%. So you have a $20,000 dividend, which we said in the past you were paying the US 15%. Well, now Israel's going to tax you $5,000, 25% of 20,000. Israel's tax is $5,000 minus the $3,000 that you paid to Israel already. You're left with an additional $2,000 tax on your dividend income. And then, like I said, no tax on Social Security. So you see kind of the bottom line, kind of comparing the 2 years, year 10 versus year 11. Even though it's very different as far as who you're paying your tax to. You're paying a lot more tax to Israel and a lot less tax to the United States. The bottom line, though, is same amount of tax on your pension, just you're paying Israel instead of the US, but no additional tax. Same amount of tax on your Social Security, zero. The only difference is you have this extra tax on your dividend because Israel has a higher tax due on dividends. Now, obviously, this is a very specific example to someone who has, this income breakdown. If your income breakdown showed instead of pension income of 100,000, rental income of 100,000, the difference with making Aliyah would be much more significant. So again, we have to really talk about everyone's specific situation, but I hope this gives you kind of an overall outline of what you should expect from a tax perspective when you make Aliyah. Now, assuming assuming when all this is said and done, you have money left over, and hopefully you're making Aliyah with a bit of savings in your pocket already in an ideal situation. And in that situation, I'm going to hand it over to Aaron Ginobili, the wealth manager, who will go over the considerations as far as from a financial planning perspective to make sure, obviously, that your savings are protected, that your money can work for you while you are in Israel.
Thank you, Ellie. Just want to check, can you see my presentation now?
Yes.
Fantastic. Okay. Ellie, there's been lots of people asking questions and answers in the section for questions and answers. I've answered as many as I could during the time that you were speaking, and I've left some of the more tax-focused questions for you to do. For everybody who's participating, you will be able to use that question and answer feature. Our contact details, as Ellie said, will be the final slide of this presentation, so you can feel free to contact us both. Our email addresses will be there. We do have a mailing list for potential Olim. We don't send out thousands of emails. Believe me, we did a tour of the US in November. I think we've maybe sent 2 or 3 emails since. So it's really, you know, we don't bombard your inbox, but we do keep you up to date with some of the changes as they happen when you do make Aliyah. So to introduce myself, originally from London, as you may have heard from, or worked out from my accent. I live in Ra'anana now, married with 4 kids. I'm a licensed portfolio manager here in Israel, which is basically the highest designation of investment manager you can receive here. I work for a company called Pioneer. We manage about $2 billion worth of assets. We've got a specific focus on the Olim market. We're fully regulated here in Israel. And are also SEC regulated too in the States. We have an office in Miami, in Aventura, with about 5 or 6 employees, and we're mainly based here in Herzliya Pituach with approximately 60 employees. So making Aliyah with financial peace of mind, I think, obviously, with everything that's going on in the world, and especially when you're coming as a retiree, you have a big focus on some of the other things as to relate to Aliyah, where you're going to live, who you're going to socialize with. Yeah, and your money and your finances are probably less of a priority, but hopefully through the course of this presentation, you'll get an understanding as to why it is something to do and focus on before you come, because the more you can prepare before you come, the easier it will be when you arrive. I'm going to split this presentation into 2 slides, or 2 sections rather. The first will be leaving America and what you need to do basically before you leave and the consequences of leaving, and then obviously the second half will be really welcome to Israel and how that relates to your investments and your pension plans once you arrive here. We always like to start here with a little bit of visual. You can explain things to people and you can talk to them and you can show them clearly what they need to avoid, but sometimes you actually need to make it crystal clear, and that's what we're going to try and do today. Okay, there's 5 main points really when Americans make Aliyah, and we're going to go through them one by one. The first is your current US institution and whether or not they want to continue managing your funds, your US pension plans, and you know, there's a number of them that are there as well, but how they're affected by Aliyah, US mutual funds, and that's connected to number 5, PFIC, and we'll discuss that. And then finally, and probably most importantly, we're going to have a discussion really especially relevant for retirees, where most of your income is coming in dollars from Social Security, from pensions, from real estate, from investments, and how we manage that, given that when you live here in Israel, you're going to be spending your money in shekels, and it's obviously an exchange rate risk. As you know, the exchange rate, the dollar shekel rate moves, you have an exposure, and we're going to discuss that. And like I say, PFIC, which is number 5, will also cover as part of US mutual funds. The first and probably the biggest issue, I don't know how many of you have experienced this or heard about it from friends or family that have already made the move. Basically, when you move to Israel, for a number of reasons, mainly compliance-wise, your US institution doesn't really want you as a client anymore. US institutions, and we've put some of the ones at the bottom there, I'm sure if we did a survey, probably 80 or 85% of the people on this call will have at least one of their retirement funds or their bank accounts or whatever it may be with one of these institutions. What I'm talking about right now is purely investment accounts. Your bank account is not relevant to this. You can keep your bank account or bank accounts at all of these institutions for your day-to-day, your checking and your credit, etc. I'm talking pure investment accounts, brokerage accounts, places where you invest money. Basically, what really happens is these organizations, from a compliance and from a risk perspective, are set up to handle US citizens who are US residents living in any of the 50 states, but that's how they're set up. Once you become a US citizen living in Israel, you're no longer US resident for tax purposes. Obviously, you keep your citizenship and you keep your passport, but from a taxation perspective, as Ellie described, your entire situation changes, and the banks basically aren't really set up to do that. They don't want to give you cross-border advice. There's an issue really because they're not regulated in Israel, and they're talking to you whilst you're in Israel, and even if they only talk to you whilst you're back in the States visiting family, etc., it's kind of too close to the line. All of these institutions have been fined big money for compliance failures in the past with regards to private and individual clients, and they basically they don't want you anymore. Once you give an Israeli address, a lot of these institutions will probably say to you, yeah, thank you very much, here's 90 days notice, please close your account. And it's as serious as that. So there are still some US institutions, and we work with a number of them, who are still happy to have your funds. Often it's with a portfolio manager such as ourselves, where they know we're a fully licensed entity in your country of residence and a fully licensed entity in the US. And they're happy to, custody client assets on that basis. But really the kind, if you are a client of Vanguard and you ring them up and you tell them I'm moving to Israel, this is my address in Jerusalem, Ra'anana, Modi'in, Tel Aviv, wherever, chances are your advisor will say, thank you, it's been a pleasure, but it's time to move on. Coming to the second part, which is US pension plans, all the things you see on screen, the IRAs, the 401ks, these are all US pension plans, and they all have to stay in the US. You can't come to Bank Leumi or Bank Hapoalim in Israel and try and set up a 401k bank account to transfer your money in. They're American structures, and you can't replicate them here in Israel. And therefore, they have to stay in the US. You have to have them managed by a custodian in the US. There's no alternative. You can open these up prior, with friendly custodians via us, either before or just post Aliyah, so that you can continue to have your money basically managed in the US, but by a local advisor here. And as you'll see, there's definitely an advantage to having somebody really who understands your circumstances from both an Israeli and an American tax perspective. US mutual funds, they're often a core part of retiree portfolios. People who've been invested in the Fidelities and the Vanguards of this world will almost definitely have those institutions' mutual funds within their portfolios. Really and legally, they're only supposed to be sold to US citizens. You have some custodians who, if they allow you to stay, they'll make you sell all your mutual funds. Others will say the ones that you have, you can keep, but you can't buy any more. But they're basically, because the prospectus is clearly outlines that it's to be sold to US residents only, it becomes problematic from a legal perspective if they're held by non-US clients. Again, another one of the reasons why the institutions aren't so keen on holding your money in the first place, so they don't fall foul of any of these regulations. But as I said, different institutions do have different outlooks. The main actual issue, which we'll kind of talk about actually now, is probably easiest, is this PFIC issue. Basically, all mutual funds, when you hold them and you live in America, there's no taxation issue really whatsoever. You report, and it's very, very simple. Because these are PFICs, and especially if you hold Israeli mutual funds and you hold other international mutual funds through your portfolio, you get into very messy territory. It's punitive from a tax perspective, can sometimes be 60 or 65% taxation rate. As Ellie will also be able to vouch, it's also a complete pain, I'm trying to think of a polite way to express it, of a reporting situation. It can add 30 or sometimes even 40 pages to your tax return. So it's really something to be avoided, and less relevant in some cases for retirees, certainly relevant if you're going to come and work in Israel and start having savings and pension plans here in Israel. Definitely something that as an American citizen you want to thoroughly avoid. So what portfolio changes do you need to make? You can use ETFs. They're good. Lots of people use them now, especially they're low costs. They're very efficient. You can still hold your individual stocks and bonds, so you can hold your Google stocks, your Amazon stocks, Facebook, whatever it may be, and your direct debt with companies. Like I say, I always compare this to a family doctor. I'm sure many of you will have been with the same physician for 30 or 40 years. But when you make Aliyah, unfortunately, the first time that you're unwell, you're not going to be able to call up your family physician in the United States and ask him to medicate for you. You're going to have to create a new relationship with a local doctor, and give over a new history, etc., and make a new relationship. And this is basically what we push clients to do, because really the American advisor is used to dealing with you as an American resident client, and he doesn't know, because it's not his expertise and it's not his client base, what it actually means to manage money as a US citizen, non-resident, in a taxpayer-friendly way. Because I think we're all in agreement. Nobody wants to pay extra unnecessary tax. For those of you retirees making Aliyah, all the rules basically apply the same way. There's no difference in terms of the RMDs and your required minimum distributions. So do continue to make sure you take them. All those rules are very similar. I know some of the rules, obviously, with COVID-19 have changed for this year, in terms of being able to take them or not take them, but it's still something that very much applies for you, even if you're no longer living in the US. Okay, so moving on to the Israeli side of things, we've discussed what happens when you leave the States. Well, let's talk about now what happens when you come to Israel. So, as I mentioned before, your biggest real issue, especially as a retiree, is your assets are in dollars, as you see on the right-hand side of the screen, your investments, your pensions, which you can't move to shekels even if you wanted to, all your retirement accounts, potentially the proceeds of the sale of your home, or any other real estate or investments that you have. But obviously your day-to-day and potentially a future home purchase is in shekels. And I've put here, Maccabi is Israel's biggest healthcare provider. IKEA, which is obviously famous and worldwide, but has a number of stores here in Israel. Supersol, which is probably our biggest supermarket chain, and Aroma, which I'm sure you all recognize from your visits here, one of Israel's leading coffee, I guess our Starbucks, but it's quite a poor equivalent if I'm being honest. But either way, these expenses are shekel-based expenses, and all the time that you do not have shekels in your account, you have what we call a currency exposure. When you're a wealth manager or a financial planner, there's always an element of risk in investments and in the markets, and what we try and do always is minimize them where we can, or remove them potentially. Obviously, when you're a pensioner or a retiree and you're moving over money from the States, the shekel dollar rate is hugely important to you. If you're bringing over $10,000 a month and the rate's 3.6, you get 36,000 shekel. If it's 3.3, you get 33,000, and you've lost 3,000 shekels just out there in the ether of global exchange rates. So you do have a currency risk, and we've seen, and you'll see on my next slide, the volatility of that exchange rate and the strengthening of the shekel against the dollar over recent years really has a bottom line impact on client and Olim's finances, basically. So you do want to potentially think about whether or not investing in shekels, potentially, even though it doesn't give you the 10-year tax exemption, whether or not it's actually something, because it removes that risk of the currency and all the time worrying about what the exchange rate is. There's certainly something to be said for that. I always recommend clients, certainly when they arrive, they come with at least a year's worth of shekels, just so that they know they can breathe. They're not relying on the rate. If it moves around, they're comfortable. So I certainly would say that's probably the most prudent way to live 12, and if you're particularly conservative, even 18 months worth of your living expenses. This is the dollar shekel rate for the last 7 years. So you can see the high was basically in 2015. It was up at just over 4.05. The low, which we can see, was basically 3.39. So again, you can see a general trend. There's a spike there, which on the right hand side of the screen you'll see in 2020. That was literally a 2-day spike, which is actually quite an incredible thing. It literally, the shekel rate moved from, I think, 3.5 3.45 to about 3.88 in the space of about 48 hours. People who got in there quick did fantastically with these things. Obviously, it's sometimes it's better to be lucky than good, like they say. But really, the differential there is huge, and it's already come back down. I mean, you can see here this was taken, I believe, on the 22nd of May. And it was 3.53. So that's a big difference in basically a month, from 3.89 all the way down to 3.53. So it really does affect. And if you're bringing money over for a house purchase and you bring over $1 million, then the difference between getting 3,890,000 shekel or 3,530,000 shekel, I mean, that can be the difference between, an extra bedroom in an apartment. So it's really something to concentrate on and be aware of. What I would say when we compare this exchange rate is this exchange rate, the 10 years of the shekel versus which currency, which is a flat line, and it's obviously, of course, the shekel. So you may have a tax issue. For those of you, and I saw a question before from somebody from Canada, the answer to this as a Canadian or as an American would probably be different because of the fact that Canada doesn't have a citizenship-based taxation. So once you live here from Canada, you haven't got any taxation responsibilities to the Canadian government. So really investing in shekels and not utilizing your 10 years probably isn't the best suggestion. For you, vast majority of people on this call who are US citizens, you're paying tax to Uncle Sam anyway. So actually, when it comes to this sort of income, the actual tax differential is not so great. And you get obviously the flexibility of knowing you don't have to worry about exchange rates, which can be very good. Now, I have to be perfectly honest, this is the first time I've ever included this slide because until recently, actually investing in shekels wasn't particularly lucrative. The yields were very low. You were probably looking at like 1 or 1.5% on your money for well-rated bonds and things like that. Because of Corona and because of uncertainty in the market, there's probably been a once-in-a-decade opportunity over the last 4 to 6 weeks where yields on relatively conservative shekel bonds are probably 4.5% to 5%. So it becomes a lot more of an interesting discussion to have with clients to say, well, for a 5% yield in shekels for my money, and a fixed exchange rate of 1-to-1, I'm happy not to really utilize my my 10 years of tax, given that anyway my investment income in the States I'm paying to Uncle Sam anyway, and the taxation differential again depends what tax bracket you're on in the States, but it's really not substantial and gives you that peace of mind. I've mentioned here Israeli investment options. You do have to be careful what you invest in Israel. Nearly every single Israeli mutual fund is a PFIC, which I described before, and is terrible, basically from an American tax perspective. So you do need to do direct bonds and direct equities, etc. But it is possible, and I would definitely say for those people who really are up at night looking at the exchange rate and wondering what it's going to do to them, then it's certainly something with this once-in-a-decade opportunity to think about. The only caveat I will say to that is you do need to have an Israeli bank account to have a shekel investment account. There's no way of doing this from a American brokerage house or anywhere outside of Israel. They're not set up for it. So you do in general have to be physically present in Israel to open an Israeli bank account. I saw some questions before. It's going to bring me over to my next slide. Tips for dealing with Israeli banks. I always say at this point, dealing with Israeli banks is a real test of your Zionism. It may be a little bit funny, or there might be, but sadly it's true. It's still very uncorrelated between different branches of the same organization. You can get brilliant service at institutions bank, the branch here in Ra'anana, and the same branch in Modi'in will be awful, and vice versa. So it's still and it really is banking from 20 years ago in terms of some of the things that you can do and the online capabilities. They are getting better, but I mean, you still have Israeli banks that will only accept faxes, for instance, which is incredible in 2020. And we talk about startup nation and all the high tech and everything here, and we can sell companies for tens of billions of dollars technology companies, and we're still reliant on the population to send faxes. So you do have issues. For those of you bringing money from the States, they'll ask you where's the money from and some sort of, you know, proof of source of funds. But that's really all they really need. If you're bringing money from a third country, if you've got money in Switzerland, etc., or things like that, they will ask you more questions, which is kind of understandable, and they'll want proof from an accountant or from a tax specialist that these funds have been declared in the US. I mean, you may have seen, basically, Bank Leumi paid a big fine to the US government recently. Mizrahi did too. Hapoalim's about to pay the biggest one very, very soon. So they're very, very super sensitive about US clients. And like I say, I mean, I work with people the other way as well. So Israelis who've gone back, to the US to work for companies, etc., and they're very, very, very limited in the banking capabilities they can offer people in the US just because they're so scared of these issues. So, and you can open an account via the embassy or the consulate in Israel or via a notarized power of attorney. There are other ways around it, but in general, you have to be physically present in Israel to open a bank account. Please be in touch with me. I can send you to the appropriate branch, because there's only a few of them of each institution that deals with foreign residents before you come, and then you can change the account to an OLES account, or they'll open you up a new account once you do make the move. I just want to finish off the presentation just a little bit by talking about kind of some of the basic principles of financial planning, and that is really we're all living longer. You can see the projections, and the average age here in Israel for somebody born today is 84 for a woman and just over 82 and a half for a man. I think advances in medical technology, and obviously, I appreciate the pandemic that we're going through now is certainly something that maybe makes this less relevant for now, but in general, the feeling is, advances in medical technology and quality of care means people will live longer, which means you're going to be retired for longer, which means you've got to make your money work for you for longer, basically. Once upon a time, people retired at 60 or 65, and most of the time they died within 15 years. Now we probably all know people who live well into their late 90s, even into their hundreds, and if they've retired at 60, well, all the money that they've earned in that time needs to survive for another 40 years. So, I mean, we see here life expectancy. This was done by Morgan Stanley. This is if a couple reach age 65 and they're still together, there's a 92% chance one of them will reach age 80, which you can see on the left-hand side. 76% chance the woman will reach age 80, and 67% chance the man. On the right-hand side, the chances that one of them will reach 90 is 50%. So basically over 1 in 3 women, as you can see, will reach age 90, and almost 1 in 4 men will reach age 90. So we really, you can't retire at 60 or 65 and have money for 10 years. And it's a big, big fear of clients who I meet all the time, that they're going to, potentially run out of money before they die, which is a scary, scary thought, and probably their biggest fear, which is why putting into place, and especially when you come on Aliyah and it's a new stage of life for you anyway, in a retiree sense, it's very, very important to put together a plan that ensures you have enough money to fund the rest of your life. This is just a little bit about inflation. We've all seen headline inflation rates. Inflation is basically how much prices increase each year. So if you're to use a naive example, if your Starbucks coffee is $1 in 2020 and in 2021 it's $1.05, then the inflation rate is 5%. In general, the inflation rate's hovered around 2%. It hasn't been high, but really that's a reflection of the fact that most of the things that we buy, and which are goods basically, are all coming in from China and are all low cost, and the prices of them are often dropping. What it doesn't reflect is really services, which is what really retirees use. And that is a much, much, much higher rate of inflation. You're using taxis, you're using nursing homes, you're using home care, you're using all these sorts of medical professionals, etc. And their inflation rate is significantly higher than that of products. If you're in your 80s, you're probably not buying the latest iPhone or the latest Samsung, but you are probably having some form of carer come in a few times a week, etc. And those are the things that really affect you. So inflation basically means if you stay in cash and the inflation rate is 2%, you're losing 2% of your money every year in terms of the purchasing power that you have. So it's super important to basically make sure that your investments stay ahead of inflation. You can see here actual inflation rates for different types of people. You can see on the bottom right, if you're still living at home with your parents, you have a negative inflation rate, so that's not a bad thing. You can see the actual CPI is resting at around 2.5%, but really for pensioners, you can see on the left-hand side, retirees, you're looking at 9% a year, which is significant. And it erodes capital very, very quickly. Final real slide in terms of the presentation. Legal structures in Israel in terms of safeguarding family assets, much less prevalent than they are in the US. They do it usually through insurance wraps, which are a big no-no for American citizens. You can use structures, you can use trusts. Definitely need to be reviewed by an expert if you have children who are still in the US and children in Israel. When you have mixed resident beneficiaries, it can be very, very messy. Sometimes it's worth doing two trusts, etc., but definitely contact specialists if that's the way you would like to manage your affairs. Bottom line, definitely have a think about this before you come on Aliyah. I always offer anybody who approaches us through Nefesh B'Nefesh, we're happy to review your portfolio for free just to see how Aliyah friendly it is. Happy to help you set up bank accounts here in Israel for those of you who are planning on coming on pilot trips before you actually make Aliyah, introduce you to the right people. Your tax affairs are going to be more complicated than they were previously, so do avoid the rookie errors, the PFIX, etc. Definitely keep yourself invested and stay ahead of that inflationary curve, because it really does erode your long-term capital. And obviously for those of you retiring here, you do want to have the retirement of your dreams, so it's definitely worth consulting with a tax and with a financial planning professional to make sure that you're doing things in the most efficient way to make that dream a reality. We're going to put our and leave this on here for a little bit, our contact details. Ellie's based in Jerusalem, and his email address and US and Israeli phone numbers are there. Mine obviously too. I based in Herzliya from an office perspective, but we travel around all of Israel, and certainly always happy to have an introductory phone call or meeting. And we do look forward to hearing from you. Enjoy the rest of your day.